This is the next episode of Moderate Voices. Today we're going to be discussing tax breaks. Although we're really not going to take a position one way or the other on this one. This is more a, what are the tax breaks? Where are they right now? How does it affect things?
Not tax breaks, tax brackets.
Yes. I apologize for using the incorrect term because I am very big that terms matter. Tax brackets. Because tax breaks, we do take alternate viewpoints of. But tax brackets, really we don't. They exist, whether or not you want to modify them, change them. I don't think changing the tax brackets is as big a deal as changing the breaks and the ability for people to hide income is. Because, let's face it, two people making the same amount of money, one is going to pay a whole lot more money than the other one who hides everything. And when I say hide, completely legal. Completely legal. But there are ways to avoid paying taxes that are completely legal that the government says we should do to support certain behavior. Well, any law like that usually encourages an excessive use of that behavior. But that is another episode. So for this one, we're going to be discussing tax breaks. First, brackets. First and foremost, what I am going to recommend is anybody who actually is going to concern themselves with understanding taxes, and anyone who's protesting the 1% versus the less percent or whatever, really should have at least a general understanding of the tax situation, or our tax situation.
Yeah. That's what I wanted to talk about. What
I recommend, and this is, what the IRS would recommend, is they have something called the Publication 17. They release it every year, usually mid-December for the current year. So mid-December of 2016, they released Publication 17 for tax season 2016. It's a free download PDF file. This year it was 296 pages, so it's moderate sized. It's not huge, but it's not small. And it's not all-inclusive. It references a lot of other publications and a lot of other things, but it gives you a pretty good idea of what the tax code for that year is going to be. Now, it is tax jargon, so it can get confusing, but if you read through it, you'll pretty much know what the tax situation is. And if you're old school, you don't like PDF, you don't like doing everything digital media, you can go onto the irs.gov and request that they send you a hard copy of it. And since it's a government publication, they'll send it to you for free. And I did that a couple of years. It's usually about 2-3 weeks you get it. Sometimes you'll get an email saying due to, publication issues, it'll be a little delayed, but you do get it in a hard copy version. That is where we're going to be getting most of our information from, is directly from this publication. I have printed out page 267, which has the tax rate schedules.
I also have 267 open on my computer, so I can reference this as well as we move along. Yes.
See, old school, I like a hard copy. New school, which you would think between the two of us, he would be older. No. I am actually older. So
he's much older than me. He's a full 6 months older than me. He's ancient.
But either way, you can get the information and you can read it at your leisure. So anyway, the first tax bracket, pretty much everybody knows. I personally view the 0% tax bracket as a tax bracket. If you make income and all your deductions and your itemized, or even your standard deductions and your exemptions is greater than your income, you pay no taxes. I consider that a 0% tax bracket.
Okay. I mean, they don't really have a...
Which I guess we need to go back and discuss. When they are talking about tax brackets, they are only discussing taxable income.
Right.
So what you do is you have your gross income, which is all your W-2s, your earned income, your combat pay, your Social Security, your workman's comp, your investments, your businesses.
Everybody should get that they have their income. Then you have your deduction.
Then you have your deductions. After
Which our
your
last
deductions,
episode, we talked about various levels of deductions and stuff. Do you have up your families of certain incomes, at least no?
I only have the families of 2 with 3 children. Yes.
Okay, that's what. Because that's what we should think about. That's what referencing here, not necessarily single people like myself, but
even
married.
you have a standard deduction.
Yes,
it's a little over 10,000. A family of 5 is a little over 20,000. So after you come through all the gross income minus deductions, you get taxable income. Taxable income, you have your 10% tax bracket. This is depending on your filing status. You have basically 4 different filing statuses for your tax brackets.
I think to keep it somewhat simple, Jason, that we should really only talk about single or married filing jointly for brevity in this case. The others are different, but...
For today, I will agree with you, but we will get into head of household at some point.
Yes.
Because head of household is actually one of those filing statuses that is meant to undo harm and may cause more harm than it undoes. But just to kind of throw out there, there's also married filing separately. If you're married but you don't actually trust your spouse, you can marry filing separately, which they essentially treat you as single minus certain credits you don't get to take. But other than that, that is pretty much single. There's a few other things, but so we're going to look at single and we're going to look at married filing jointly. Married filing jointly is the same as qualifying widower. If your spouse died and you had kids for a couple of years, you still get to file as married essentially until you can kind of move things around and adjust to the fact that your spouse died. So we have the 0%, which on single is a 0 to 9,275, and basically that's pretty much simple. You pay 10%. Now it's in increments of $50 because they have their little tax table, but essentially you pay 10% of your taxable income. Now the next one is 15%. This is 9,275 to 37,650.
I think
now this one is important to understand, and this is kind of where you were having your how does this work? If you say get 37,670, you don't pay 15% on all of that income. What you do is you pay $927.50, which is 10% of the maximum 10% bracket, plus 15% on any income above 9,275. So
I think that's where a lot of people get lost. They don't understand how that works.
Trust me, I've talked to, you have a PhD. I've talked to people who are supposed to be smarter about taxes than either one of us, and you're right. It is confusing, and it does kind of get lost occasionally. The next tax bracket is the 25% tax bracket, 37,650 to 91,150. And this, again, you have your base amount of $5,183.75 plus 25% on anything over the maximum 15% tax bracket. And that pretty much is consistent all the way through all the tax brackets. Tax bracket 2, there's a 28%. That's $91,150 to $190,150. There's a 33% at $190 to $190,150 to $413. Why do we even have the 35% tax bracket? There is a 35% tax bracket. How many people fall into this range? 413,350 is the minimum. 415,050 is the maximum.
It's a $2,000 bracket.
We have a $2,000 bracket in the $400,000 range. Why?
That's an excellent question. I do not know.
Why?
That's what. Then we have the final tax bracket, the top tax bracket,
which is 39.6%. Now, I'm you talk to most people.
Before we go on to other stuff, let's go ahead and go now. Married filing jointly. I think what we should do on it is just give the top end of the tax bracket, okay? Because once you go over that number, you're in the tax bracket of.
Okay, the top end of the 10% is $18,550. The top end of the 15% is $75,300, which you guys will kind of notice those two, married versus single, is double. So they've kind of eliminated this whole dual income, married working together tax penalty. However, next bracket, as far as the IRS is concerned, one of you should quit working. The top end on the 25% is $115,900. The top end of the 28 is $231, which is only $40,000 more than the other one. The top end of the 33 is $413,350, which is the exact same as the top end of single.
Yeah.
So at this point, now there is a little bit of a difference on
the 35% tax bracket is much bigger here.
What?
The 35% tax bracket is much bigger for married filing jointly.
Is much bigger for married filing jointly. And then, of course, that means that the 39%, and what we should say is the 39.6%, there is no top end.
So the 35% bracket, we left that out. It's $466,950. Is how much it is. That's the top end for it. Which compared to the single person, remember that one was the one that didn't make sense because it was a $415, which is only $2,000 more than.
And even married filing jointly, it really. I mean, the 33% tax bracket is what, $180,000, and then you have this $50,000 tax bracket.
I don't know the motivation for it. We can talk about that in a second. But basically, we have 1, 2, 3, 4, 5, 6, 7 tax brackets as they currently stand.
Yes.
No, 7. Mulling
7 different tax brackets and 4 different filings. Basically, we have 7 tax brackets. Those are absolute. Where the numbers are is your filing status. Because none of the filing statuses have anything special on the tax bracket. Your tax bracket's 10%, 15, 25, 28, 33, 35, 39.6.
Yeah, the filing status just affects the range on the
income that gets taxed at which bracket. Now, on the other hand, did go in and do a little bit on how your income is generated decides how those tax brackets affect your taxable income.
Okay.
If you have earned income, we've discussed it earlier, but basically it's W-2 business are the primary sources of earned income. You're going to be taxed at that rate. Let's say instead you're a trust fund baby.
Okay.
We have quite a few of those.
Mm-hmm.
And all of your income comes from qualified dividends. What do you think the top taxable rate if you own, let's say, Mitt Romney and his, the fact that he makes it all through business income? What do you think his tax top?
He makes it off stocks, basically, right?
Yes, makes it off stocks.
Stock investment income. So basically, you have earned income where you work for it, and investment income where you just get to goof off all the time. I'm going to go investment income is probably like 25%.
You're close.
What's
20%?
20%. Now I understand the motivation for that is that the thought process there is that people who are theoretically people living off of interest income or invested income should be retired, and you don't want to. I could kind of see that motivation that you don't want to tax them at a very high rate because that's all they have. Okay, they're not actually increasing their monetary gain at all, supposedly. I still think it's low though. Because you're right, there are millionaires out there who basically get to a point where
the thing is 0%. We have 7 tax brackets. The first 2 tax brackets, 10% and 15%, do not tax investment income. So if you're in the bottom 2 tax brackets and you have a lot of investment income, as long as it doesn't kick you to the next tax bracket, you don't pay any taxes on it. The next 3, actually the next 4 tax brackets is 15%.
your investment income is taxed at 15%.
It's taxed at 15%. And then the top end tax bracket is at 39.6. Now, when you start talking about, the tax brackets and all this, what your conservative party what your Republicans, your conservative, and your business people will say, that income has already been taxed. The businesses had to pay taxes on that whenever they declared a profit for that year.
Now, I think we're getting a little more philosophical here. My thing, what I wanted to do in this was just to actually sit down and so that we have 7 tax brackets.
We have 7 tax brackets.
And then let's talk about the people's income that you had generated from before, just numbers wise. But basically, if you bring home average family in state of Oklahoma, to husband, wife, actually full family, a couple kids. If you actually bring home and pull up taxable income somewhere.
Hold on a second. Yes, Dad?
Hi, Jason.
I was supposed to.
It's raining tomorrow, and Mom's been sick for the last week, and she's got congestion. She's been coughing, and she's still sick, and her chest is hurting where she's been coughing. So, you weren't planning on us coming up tomorrow, were you?
I definitely was not planning on you coming up. I may come out there and see you guys. I'll give you a call whenever I wake up tomorrow and see if I can kind of come out there and see you.
Okay.
But it sounds like Mom pretty much needs to stay home tomorrow.
Yeah, she needs to stay in out of the weather. It's supposed to be rainy tomorrow.
All right. I'll give you a call when I wake up.
All right. We'll talk to you later.
All right. I've opened my sheet. Married filing jointly with 3 kids is going to have less taxable income, but they're going to be in the same tax bracket.
Well, I just want to kind of throw out some numbers so people can get of the ones you have kind of worked up there number wise. Which would you consider a relatively average family?
Honestly, family 4 in Oklahoma, family 4, family 5, family 2, and family 6 are pretty average.
Okay. So give me family 4.
Family 4, they make $53,000. They have $32,850 that is non-taxable income. So they have taxable income of $20,665.
So for the most part, they're going to fall in the tax bracket they're going to fall into. There is going to be the 15% bracket.
They're going to fall into the 15% tax bracket. So they're going to have. Let's just do the math and see whether or not the tax brackets are accurate based on the tax table. So they owe $927.50 because they max out at the 10% tax bracket. So you take their income, their taxable income.
Mm-hmm.
Let me just use my sheet here to do this.
Oh, I see. I can scroll up. They were in the $20,000 range, right? Well,
Yeah.
what was their income?
Their taxable income is $20,250.
Okay, so the $20,250 falls on that tax line. So their tax is $2,578.
Yeah, their tax is $2,179.
2,114 is married filing joint for $20,250. That's what you said they made, right? 2106. Sorry, I was looking wrong. 2106 is their tax. Whereas a single person making that much money, their tax will be $25.70. What's wrong?
What is wrong is I am using all the information from a single person. Needless to say, my information and your information did not agree.
I was just reading off the tax table, which said somebody whose taxable income was $20,000, $250. Mary Fallings only was $2,106 was their tax. I'm not sure what you're doing right now.
What I am doing, because remember, there is a mathematical equation that generates the table. I'm actually doing it through the mathematical equation to see what their taxable income would be.
That's going to be 15% of, well, it's going to be $927.50 plus 15% of roughly $10,875. So that's going to be roughly 10% of that would be 1,000 something. Yeah, it's about right. Let's see. 20,250 minus 9275 equals 10,975 times 0.15.
Are you doing the same thing I did?
1646.25.
You're doing the same thing I did. Which table are you looking at? You're looking at the single. They're not single.
Oh, well, yeah, that's true. So that's actually going to be...
This is why people, whenever you're doing your taxes, double checking your work is very, very important.
So it's actually like minus... So a single person would pay $25.70, $3.75, which that matches the table. And so then they're going to... It'll match the table. Because they're only going to pay... They only have $2,000 in the... Not even that. They have $1,500 in the...
That's where I messed up.
They have $1,500 in the next tax bracket. So... That's 225 plus 1855. Is 2080. A little off on some kind of subtraction there, I think. But
no, there's rounding issues. All right, so their taxable income is $20,655. P minus 1855.
Let's not get into this too much. It does. The table should work.
The tables are, because the other thing is if you're $1 up, you have the full $5. If you're $1 down, so within $10, the table is going to be accurate.
What I'm trying to get here, though, is I think it's important for us trying to get across that basically those people got taxed just barely at 15%. They really aren't. Most of their money was not in the 15% tax bracket that is currently written.
Most of their money is actually only like, I'm showing $2,100 is in the 15% bracket. And you can also look at it.
So let's look at that.
But here's my concern when you're discussing this. You're looking at that number going, well, this is what they got taxed. You're ignoring the FICA tax.
Yes, we're not going to talk about FICA tax in this. We're talking about income taxes.
We're talking about income. Anytime you start having people talk about income tax, they ignore FICA tax. And I don't think that's right.
You're correct. I don't disagree. What I'm trying to get at, more importantly, from my thing about tax bracket information, FICA tax doesn't factor into tax bracket. It's a separate tax that we need to talk about. We kind of talked about last time. It needs to be its own conversation about the FICA tax. it isn't necessarily what people think about in our. You don't pay it at the end of the year in a lump sum or to make up the difference and stuff like that. You pay it as you go. It doesn't fall into this idea. When people talk about taxes right now, and you're right, they should think about FICA. When they talk about taxes and tax breaks and tax cuts and tax raising and taxes, this is what they're talking about. This is what people think about, is in terms of where they're going to fall. Now, as far as married filing jointly, of all the families you had, the final family, family 6, did they fall into the 25% tax bracket at all with their money? What was their gross income? I think was around $100-some thousand, right?
No.
It was like 90 something.
Their gross income is $92,000,
Okay.
and they do not fall into the 25% tax bracket. They
Okay.
still fall
So
into the 15%.
What I'm trying to get to a little bit here, the majority of Americans or the majority of Oklahomans, if they fall into the 25% tax bracket, if they're married, filing jointly, okay, just as regular old family, they're extremely rare. Would you agree with that? Or not extremely, they're rare.
Rare. I mean, 92,000 is not unheard of for a. Let's, our parents. Personally, my parents.
But 25% is the top end. I mean, I really think for the most part, if you run into somebody in Oklahoma, who your parents probably fell into that. My parents never went above 15%.
My parents have never gone into the 25% tax bracket. My dad says he will have to in 6 years based on his IRAs and his required minimum distributions. Basically, his IRA distributions minimum, which he either gets taxed 25% or 50%.
But here's what I'm really trying to get at. General majority, I feel comfortable saying 75% of Oklahomans.
I would say that's a low number.
In no higher than a 25% tax bracket. And out of that, majority of that is going to fall into the 15% tax bracket.
Majority, if not lower. Now, the other side of it is since they have children, their actual effective taxes is less than that tax bracket.
That's correct. We're probably talking about the worst case scenario, or most tax case scenario would be.
Let's just look at that family 6. 92,000 gross income, family of 5, 3 children. They only pay $7,945 in taxes. That's less than 10%.
Yeah, because of all the deductions, the credits they get, and stuff like that.
Even if you add FICA tax on top of that, FICA tax is 7.145%. So let's just say 7.2. They're only in the 17% tax bracket.
And that's a reasonable way to look at it. So when I hear, for me, I'm a kind of a bit of a layman, but at the same time I do know enough about this kind of stuff that I've always wondered. When people talk about tax cuts and they talk about lowering percentages of certain brackets, I personally agree with you, I think there are too many brackets. That's fairly clear. I don't know why we jump from 25 to 28 to 35 to 30, 33 to 35 doesn't make any sense to me really at all.
Especially on single. It makes absolutely no sense on single.
It's just kind of like
all you're doing is you're taxing $2,000 at an increased 2% rate.
Yeah, that's not even that's more hassle than it's worth, to be honest. So I think one cleanup situation is, we're never going to go to a flat tax. Everybody wants that. That's never going to happen. It's just accept.
Even if we went to a flat tax, because what's a flat tax? One tax bracket?
That's what people want. That's when people talk about tax bracket.
We can go to one tax bracket. You know what? You know how they're going to handle going to one tax bracket? How much income is taxable?
Yeah.
They will increase that. What you can, if you are doing certain things, get credits.
Essentially, although I kind of want to point out this is what I want to say. It's almost a flat tax now.
Well, remember, 50% of the population doesn't pay taxes.
Correct.
They're when they get to their taxable income,
They're at
or
0%.
not necessarily their taxable income, because you got to remember all those credits offset taxable. Because family 4, even though they had a tax liability of $2,179, they don't actually pay taxes.
Because of all the tax credits that exist for them at the moment.
They get tax credits, and they actually get a refund. Family 5 gets a refund. The only family that I have listed that we talked about earlier is family 6. They're the only ones that actually pay taxes. If we're not income taxes.
Income taxes. That's what I want to talk about. Because the other type of tax are the sly, subtle taxes that I don't like. That I agree with you. They're devious and evil. Yes. Because people don't think about them. They think about these big, and that's what I want to get at here in a little bit. I think people get hung up on the idea of a tax cut when they tell them they're going to get an income tax break. They don't really get an income tax break unless you're one of the top 5, making the top 5% salary in most states. You're not actually going to realize a tax break. They're talking about now the most recent tax cut break that they've been dropping the top end tax bracket from 39 to 29%. Well, if you graduate that down through, that doesn't mean they're going to drop the 15 and they're not going to drop the amount. The percentage of the 15 and 25s are still going to be the same.
Yeah, and they're even if they do increase them a little bit, because what you're going to do is you're going to stretch that income out. So let's say they do income and stretch that income out a little bit. Most of those families are at the top ends of their tax brackets. The $92,000 is at the top end of his tax bracket.
Right.
Well, actually, he's not.
He's actually right in the middle.
They could make $20,000 more and still be in their tax bracket. So they make $20,000 more. They're still in the same tax bracket, but the tax bracket's bigger. So now they're making. So you're looking at $113,000, $115,000. So it's only those people who make over that.
Right. And I think this is one of those red herrings, bait and switch things that get people up in arms that it doesn't really affect. It doesn't really affect the majority of Americans. The majority of Americans feel that they're the ones paying. It really is true that the top 1% of earners do pay the majority of what America pays, or most of the income taxes. I mean, they when you look at this and you talk about these families, most of them don't actually end up paying income taxes. Either they get credits back or something like that. Most of your average working families in, say, the Midwest don't net pay any income taxes in, right? They get it all back at the end.
What was that again?
Well, what I'm just saying is, like, most average families in the Midwest they probably, if they do pay some taxes, that they don't get back, it's a very small amount.
Yeah. Most of the Midwest, what they're going to be doing, paying tax-wise, is going to be the FICA tax or the Oklahoma state. Because even if you get all your federal back, sometimes you do end up paying Oklahoma a little bit.
Depending on the state.
For the most part, they're going to be getting federal back.
So when we talk about tax cuts, and people talk about falling into and giving tax cuts to certain tax brackets, I think that a lot of people think that it actually affects them in their tax bracket when it doesn't. And I think that's where I get concerned, or I'm worried about people feeling that, tax cuts help me. They don't help you. Actually, all they can really do is hurt you. Well, they neither hurt nor help. But if they're going to actually have any kind of impact on you, unless you have trickle-down economics, which that's a completely different conversation, just in general, look at the state of Kansas with huge income tax breaks on the top end percent. What did it do to the state? It actually hurt the state's income to the point that they couldn't make bills, and now they're going to have to raise those income taxes. If you're going to make a tax cut, I would like to see a tax cut that actually helped middle Americans or middle class tax cuts would be in the 15 to 25% tax bracket range, right?
You mean the range that most people don't pay federal taxes?
That's correct. The only way it can actually help them is if you actually lower those. We've had
this conversation. I am not discussing negative income taxation.
No. What I'm actually saying is that instead of having 10% tax or 15%, the 15% tax bracket, that should be a 10% tax bracket. Instead of a 25% tax bracket, that should be a 20% tax bracket. Now we're talking about giving those people money on their paycheck every month. Because it's being withheld and then they're getting it back, right?
No, only if they're stupid.
Only if they're stupid, you're correct.
Only if they're stupid.
And that's the thing.
Chuck, I can walk in tomorrow and have no taxes withheld.
Yeah, and that's true. People should do that if they're in these situations. They should really analyze that and make sure they have
it is their personal choice, and I don't think we should take that away from them. It is their personal choice. Do they want a large refund, or do they want to have a larger check?
It's kind of a savings plan
Throughout the year, because
kind
a
of
large
savings
check,
plan.
it allows them to look at their vehicle situation. It allows them to look at, because most of these families are going to be in debt.
It is an optional savings plan.
It is an optional savings plan, and considering the banks aren't paying a high interest rate right now.
No, you're right. But so ultimately, tax cuts in the sense of IRS income tax breaks, do they really help? Now that we've kind of analyzed these tax bracket levels and where people are at, do they really help the common average middle class worker?
No. Well, define middle class. Middle class, middle Midwest, where most of our incomes are lower than the coasts? No, not really. On the coasts,
I'm going to go with the people that I'm around that exist here. People we know. We're from the Midwest.
Most of them, when you start talking about them, they're not addressing the 10 to 15% tax bracket. They're not addressing. Sometimes they will lightly address the 25% tax bracket, and we do have people who are middle income
that would be the area that would help.
Your high-end oil field workers
would fall into the 25% range.
The 25% tax bracket. Your dual income, where they both, Anthony and Adri, they might, because they're both high.
No, they're family 6. They're about family 6 gross income between the two of them.
Family of 6.
No, your family number 6 number.
Oh, family of 6. Okay,
they're in that
family
range.
of 6. So,
because I know how much Anthony makes, and Adrian makes more, but then he makes about what I make.
So yeah, she makes more. But if he went into the private industry, although they're
in the state of Oklahoma, there isn't such a thing.
Yeah.
So,
but there are drug companies with what he does. He could become a researcher at a private company.
If he did, and Adri's on record, if he got a job that made as much as they made together, she would quit work. So basically, they have accepted that they're in their lifestyle they want.
Yeah, and that's the other side of it that people really don't understand. Lifestyle that you want. Me and you, well, you're recently to your income level, so you probably don't exactly know if this is the lifestyle you want yet.
It's going to be pretty close to. I mean, I've got opportunity to make a little extra money here and there. So
what I make, and it supports the lifestyle I want.
Yeah. But, I mean, back to the point of this little episode is all about tax brackets. Like, lay them out for people. I think, and I agree, there are too many, there are some useless tax brackets that could be cleaned up that wouldn't affect, I mean, the silly single person 35% tax bracket is just absolutely stupid.
Get rid of that.
And even in the married filing jointly, get rid of it. Just go from 33 to the top end. Just go up.
30. Don't change any of the numbers on the two tax brackets below. Just 33 goes all the way to 39. Why have that 35?
It's a pointless tax bracket. I mean, because if people are going to fall in, it's such a weird thing to fall into. Especially on the single side, but even on the married jointly, it's a biggest one. And you were saying it's not that big, really, not really, to where it's worth making that big of a deal. You might as well just have it stretch all the way up to the minimum 39% level, and I think that would clear up a little bit of trouble with the tax bracket.
What we're doing is we've discussed the tax brackets, so I'm going to wrap up here because we've kind of reached our time limit. These are the tax brackets. That's what they are. We got them from the publication 17. I highly recommend going to the IRS.gov, downloading that document, and reading that document. Because, as Chuck has tried to state, anytime they propose a tax cut, 9 times out of 10, the people for it don't receive any benefit.
And that's what I want people to be able to find the information, learn this information, and realize the numbers when they say the tax bracket affecting you. Realize which one you're in, and that it whether it does affect you or not. That's an important information to have.
And, we will go into other issues in the future, but I think this is going to wrap up this one.
Yeah, I think so.
Those are the tax brackets. We kind of talked about non-earned income tax brackets. I really want to get into that later. But that wraps up this episode, and we will see you guys later.
Yep, see ya.